Good afternoon. Thanks for joining us. It's Wednesday, June 10th, and this is our latest edition of Ask the Experts. I'm Chris Grams. I'm with CME Group, and I'm joined by two grain and agricultural experts who will be walking us through some insights on today's USDA reports. To my immediate left is Joe Vaclavik. He is owner and president of Standard Grain. He provides risk management and consulting services to grain and livestock operations throughout To the left of Joe is Dan Basse. He is president of AgResource Company, a domestic and international agricultural advisory firm, which he founded in 1987. He's also an esteemed economist and has been in the commodity business since 1979. So thank you both for joining us. Appreciate you coming back here today. A couple of quick notes to our viewers. If you do have questions for Dan or for Joe, please submit those at the bottom of your screen and we'll make sure that we get those answered. There will also be an archived version of this video of today's session available on our CME Group TV YouTube channel. That's youtube.com/CME Group TV. Dan, I thought we would start with you. I know that most of the reports I've seen this afternoon would sort of explain today's report as a bit of a ho-hum report, but as we were talking earlier, you said there's a few nuggets, a few tidbits of interest. Tell us a little bit about what you saw in today's USDA reports.
Well, I think, Chris, if you just look at the U.S. balance sheets, 20 million bushel cut in soybeans, 25 million bushel increase in corn, a little bit of an increase in wheat, mind you. We all throw that away pretty quickly, particularly since we rallied into the report. What stuck out to us was biodiesel. So after all of the RFS work and announcement that EAI did a few weeks ago, the USDA, after having a long period of time to analyze the RFS and to what the proposal meant, increased U.S. biodiesel usage in the upcoming year by 100 million pounds. That's 2%. And to produce that biodiesel would take about 8.7 million bushels of beans. So we were disappointed that you didn't have more biodiesel demand forthcoming from USDA in this report. The other thing that was kind of an interesting aspect was that the USDA found another 5 million metric tons of old crop corn left over mainly in Brazil from last year. We're not sure how they missed it, but it did push last year's U.S. corn, or I should say world corn production up to 197 million metric tons. That's the second largest on record. And stocks now are also producing, nearing the second largest on record as we go forward. Lastly, if we think about wheat, and we believe at AgResource that it's the Black Sea that sets the world wheat price for the first 6 months of the campaign. There they raised the Russian crop, they raised the Ukrainian crop, and we found that total, now I'm combining end stocks from the old crop and the new crop production, were equal to last year. And so there's plenty of wheat around the world all of a sudden. So as these markets pondered the data, we saw wheat lead the way down today, corn followed, and I think the biodiesel, as it starts to be better understood by the trade, will be the next shoe to fall in this whole thing. Those are tidbits that we took away from the numbers, kind of arcane, mind you, but again, we've got more than enough grain in the United States and the world. It's a question of weather and supply problems going forward if we can have the trend change here in Chicago.
Right. Joe, as you're talking with customers, what are they looking for? What, if anything, did they see in today's report that was of interest to them?
Well, a lot of my customers are in the production agriculture business, and obviously we'd like to see some higher prices, and we didn't get that today. I think USDA told us essentially that the supply situation in the U.S. for corn, for soybeans, for wheat remains fairly burdensome. Same thing with the global situation. We don't have anything pressing out there right now. Now, I will say that this is kind of an interesting month to see a crop production report from USDA. You know, they're giving us yield numbers, acreage numbers for this growing season that's happening this summer, but we really still know very, very little about it. Corn yield is hugely a function of weather during July. Soybean yield is hugely a function of weather during August, and we're not to that time frame yet. So aside from some of the demand things shifting around a little bit, we still know very, very little about forthcoming production.
Let's talk about, before we get to production, one of the reports I read this week said in terms of soybean plantings, is that something that you're keeping an eye on with customers? Dan or Joe, any thoughts?
Yeah, we've had a ton of rain everywhere, and there's more in the forecast this week. As a matter of fact, a lot of rain coming for the western Corn Belt and parts of the plains. So yeah, it's an issue. I don't know if it's going to be detrimental to final production. We haven't really seen that from USDA, and I don't necessarily know that it's enough just yet.
Yeah, I would tend to agree with Joe. I think as we looked at it from Monday, there's about 15.9 or 16 million acres that haven't been planted. Again, remember that 6.5 to 7 of those million acres are double crop beans. And so they're not going to have the same kind of impact. We have Missouri farmers this week planting maybe 30, 35% of their crop. They're catching up. The forecast has some rain, but it doesn't look torrential, at least until we get into the weekend. We think they make more progress. Kansas farmers are moving along. It's really Kansas and Missouri that are the two states that are following behind. We have seedings come next Monday. Planting progress for beans may be somewhere around 86, 85%. So we're behind, but not terribly so. That would make a yield difference.
Okay. Well, let's talk about some of the other factors that may be impacting the supply side of the equation. You mentioned weather, Dan. Is that something that you're keeping a close eye on right now as we're heading into pollination and eventually harvest this fall?
It is, because I think it's, and here in Chicago, it's not only the United States, it's pretty global now, Chris. We've watched the EU wheat crop for a while be dry. We now have some rain for it. We thought the same for Western Canada. The forecasts are looking a little better there. We're not overly concerned about all the rain forthcoming. There will be some ponded out areas over the next forecast. But when you look at the distribution of the rain and it not falling all at once within, let's say, a 24-hour period, but dispersed over a week, I don't think getting 2 to 3 inches of rain is going to be all that bad unless you are sitting in Missouri or Kansas. And so I think as you turn the page to the end of June, the farmer is really going to be looking at a limited amount of time to get a problem, and that problem in our mindset for corn has to be extreme heat during pollination.
Talk a little bit about, you mentioned a little bit about it not just being weather here in the U.S. and in Chicago, but globally. Is there anything to the reports of extended El Nino, its potential impact in Australia, Asia Pacific, those regions? Are we concerned at all that may have an impact on our weather system here in North America?
El Nino usually correlates with above normal or trend or above normal yields here in the United States and Latin America. The problems would be portions of Malaysia, Indonesia, which are kind of ground zero, and then to a little bit the Australian areas, which would be the correlative on El Nino problems. But for the United States, El Nino does tend to produce more than above normal rainfall and better than normal trend line yields.
So we talked a little bit about some of the supply situation. The only other thing I'd kind of touch on, or I'm curious about before we move kind of the demand side of the equation, is what, if anything, we're looking at relative to production in Eastern Europe with wheat, perhaps in South America, what we're continuing to monitor. You mentioned some additional grain, old crop grain that was discovered in South America. So are we keeping a close eye on the supply situation right now outside of North America?
Joe?
Well, there have been some weather issues abroad that have been discussed a little bit during the last couple of weeks, and I think part of that is because the market had rallied into this report. Whenever the market rallies, there's always the need to find a reason or an excuse. So I think that some weather issues in some other countries may have been exaggerated just a little bit, but we do have some issues in Russia. We have some excessive temperatures in India. Australia has their share of issues. Certainly here in the U.S. we've had excessive rains across the U.S. plains, but if what USDA told us today is correct, there's not any major issue that's going to cause a supply shortage, and in fact we're very, very well supplied despite any of these minor weather issues here and there, I suppose is how I'd put it.
Okay. Let's talk a little bit about demand. I read an article this week, I believe it was in Reuters or Bloomberg, citing that there was quite a bit of corn in China right now. What are we looking at in terms of demand from China or other sources? Are we something you're keeping an eye on as well?
Usage of U.S. corn is projected to be the best ever this year for the third year in a row. And it's actually, believe it or not, scheduled to outpace production this year. The thing that's holding us together as far as supplies are concerned are these big beginning stocks, but we're actually projected to use more corn than we're going to produce during the 15-16 marketing year here in the U.S. So exports are very good. Domestic demand via ethanol and feed usage are very good. So overall, demand is fantastic. Supply is just outpacing it domestically, at least for the moment.
Can I take a little different track on that to just get in the
absolutely.
conversation? Because we really struggle with demand in our shop. We think that the ethanol industry is mature. And if you look at USDA's report today, world corn and wheat trade is no better than stable with last year. In the case of wheat, actually down a little bit. And so when you think about the world, we see a bump up in feed residual in a lot of places in the world, but it's not the kind of thing that drives prices here in Chicago. And so we worry that USDA's corn export number for next year is up 200 million bushels larger than it should be. We're actually carrying end stocks for corn next year about 2.3 billion bushels. And so with that mindset, I think they also have to cut old crop corn exports by 25 or 50, there's not the demand that's going to get Chicago excited or the world market excited. So I worry a little bit about that. We know the Russians have a large supply of old crop wheat that is yet to be exported because of their tax situation, and they are going to be very aggressive to hit the marketplace. So I think corn and wheat have kind of got it right. I think we have to seek lower prices. And Joe, you're in the cash grain business more than I am. What's your view on farmer old crop grain? Because as we do our work for June 1st, we've got a lot of corn stocks in this country.
Farmers are terrified of the old crop corn situation right now. In particular, there's a ton of it out there. I think there's a lot of it moving here during the last couple of weeks, as a matter of fact. The worst case scenario for a farmer, and they know it, is that we get into July, we've got good weather, and the board falls apart and basis falls apart simultaneously, and that would be worst case scenario. I mean, you could easily paint a picture if we have good weather that cash corn's below $3 in this country again. It could very, very easily happen in July or August. Soybeans, I don't know. I don't know what's out there. I know that processors are paying up big time this week. As a matter of fact, we heard reports that processors in the Midwest were paying 40 or 50 cents over July futures, and crush margins are fantastic. If there were as many beans in the country as USDA says that there are, I don't know why that would be the case. I don't know what farmers are waiting for, and I also don't know that there was a ton stored to begin with. There was never any carry in the bean market at harvest. The incentive just wasn't there, whereas with corn there was plenty of carry, and that's why they're in the situation that they're in.
It's just kind of interesting to me, Joe, that the U.S. is this island of meal strength. When I look at Brazil, it's 2,500 a day, and we're sitting in the Gulf at 44 over. I mean, who in their right mind is going to buy U.S. meal? And then you look at China, because of a 15% decline in their sow herd. You know, we've got no demand to speak of from the Chinese soybean buyer to speak of nearby here, and crush margins are negative. So we're struggling a little bit to understand the U.S. premiums, but I guess if I'm a farmer, I surely, if had any old crop beans or corn, I'd get rid of the stuff.
Yeah, I agree, especially with the corn. And you know, from a farm operation perspective, there's so many opportunities out there to re-own corn on paper.
Yeah.
Options are dirt cheap call options relative to what they had been. So if you did run into a weather issue, which a significant one happens maybe 2 out of 10 years, you know, you're back in the ball game. So yeah, it could become a very, very scary situation for the farmer into July if the weather cooperates.
Obviously, we're all about risk management here at the exchange. Are you seeing farmers using options more for protection? What sort of strategies are they using, or what are you advising them to do in light of what we've just talked about?
Oh, not any more options than usual. I mean, I think the farmer in general is accustomed to using a variety of risk management tools, whether it's cash sales, futures contracts, options contracts. It's really kind of a personal decision or a operation by operation decision, and I think that a lot of the risk management, I'm hopeful, had been done prior to this break that we saw throughout the first part of 2015. But there is still a lot of unpriced grain out there, unfortunately.
Well, I know we've pretty much covered a lot of ground, as much ground as we can cover from today's report. But looking ahead, June 30th, we've got an acreage report coming up. June 30th and beyond, what are you looking at? What are you keeping an eye on, Joe?
Well, I've never had any luck outguessing the USDA on acreage is the first thing that I'll say. I know that there's a lot of talk about prevent plant in regards to corn, also in regard to soybeans. I don't know how that's going to play out. I think a lot of traders believe that the soybean intentions number on March 31st was too low, and that number is going to go higher, which kind of contradicts the weather and late planting and prevent plant idea. So I don't know what to make of it. I'll be really curious to find out. I'm not going to go too far from USDA's March 31st numbers. I'll say bean acreage maybe up a little bit, maybe corn acreage down a little bit.
Yeah, we wouldn't disagree too much, Joe. I think we're up a little bit on corn acreage. We're up 300,000 acres, which is, in the scheme of things, nothing. On beans, we're up a little like 1 million acres, getting close to 85.5. We were a little higher than that, but because of the later plantings, we've trimmed it back about 900,000 acres. But at the end of the day, I think everybody in the risk management side of things needs to understand we need a weather problem. Those kind of acreage adjustments just aren't going to do it, and we don't have a weather problem. At least what we find with producers, they may be 15 or 20% sold on new crop, and they're still sitting on a lot of old crop grain. That worries us in terms of their risk management abilities right now.
Yeah, just keep in mind that a million-acre swing in corn or soybeans one way or the other is not a make-or-break deal for these markets. It's not going to change the trend or change the long-term outlook. Weather and yield at the end of the day is really the only thing at this point that has the potential to do that.
Well, gentlemen, I'll tell you, we were very efficient today because we have no questions from our viewers.
Very good.
Any final thoughts before we sign off this afternoon? Did we miss anything? Any final thoughts for our viewers before we remind them to check our archive video?
I'd say for today, the point to take home is nothing's really changed. We've still got a burdensome supply situation across the board here. USDA didn't really tell us anything that we didn't know. These reports are going to become a lot more interesting in July and August once we get into some weather.
Dan, you've got the last word.
Joe's got it right. I mean, if I stack corn, wheat, and global corn, wheat stock and on top of each other, they're record large. The world has a lot of grain. It's a washing grain, and unless we see a weather problem, lower prices gradually is the path of least resistance. But how we get there is going to be the question with Mother Nature.
Thank you both for coming. I always appreciate your expertise, and I know our viewers do as well. So thank you to our guests, Dan Basse and Joe Vaclavik. I just want to remind everyone that an archived version of this video is available on youtube.com/CME Group TV. Thank you.